Hello, Uncle Jim here. Today I want to share with you how I'm able to earn really good passive income on a monthly basis. I'm able to do it by selling options as well as earning really good dividends. So today I'm going to share with you some trades, and I'm also going to share some great companies that pay good dividends and also increase those dividends quite rapidly. So stay tuned. I think you're really going to enjoy what I have for you today. Okay, let's go ahead and jump in and get started. I'd like to give a quick market update. It's been kind of a crazy market. Today, I believe it was down quite a bit today in the morning, and now towards the end of the day, it's almost 3 o'clock currently. On Thursday, it's I think almost on even territory, and I believe yesterday was the reverse. And I do think we're going to have many more days like this, kind of up days and down days. And I think there will be quite a bit of volatility, which is good if you're selling options. It means that there's opportunities to make some good money. And I also think I haven't seen anything that's made me believe that the Fed's going to change direction. I do think they're going to do maybe one, possibly two more increases this year. And maybe by the end of the year, they may be coming down and maybe lowering rates. But I think they're going to take a long time to lower the rates. I think they were way too low for way too long. So my guess is it's going to be slow and steady as they reduce them, only reducing them by small amounts over the coming years. So overall, I do think we're going to have a good year. I do believe we're going to be even or slightly up by the end of the year. Of course, I might be completely wrong. It's my 2 cents, and it may only be worth 2 cents. So let's jump into the main topic of the video, which is what's really worked out well for me isn't just selling options or dividends. It's kind of the two combined. So being able to earn some nice dividends as well as some good income from or premium from selling options has been kind of the match made in heaven. I've been able to do quite well combining the two. Currently, last month I did just shy of 4,000. I think I did 3,999 related to selling options, bringing in premium, and on an average basis, just shy of 1860 on a monthly basis for dividends. So between those two, that's more than I need to live. And that doesn't even include my other income from my consulting job and other stuff that I'm doing. The beauty about it is the companies that I really like to own or are the dividend paying companies, and they by nature are less volatile, and I haven't had as many get assigned compared to if I had gone with more volatile stocks or stocks that potentially move up and down a lot quicker. So and then dividends are really the true passive income. I take it most of you have stocks that pay dividends, but it's almost like interest on a checking account. It just appears in your bank account or your brokerage account, every quarter, every month. I do have some that pay monthly as well as some that pay quarterly, and it's just nice to see those funds show up. It does mean that you do have to balance how your spending is, because most of my dividends are quarterly. So 4 times or four specific months each year, I get a lot more dividend income compared to the rest of the year. So four months are probably triple what the other months are. So you do have to do some budgeting and planning and understand, well, your income's kind of going to go like this. And my goal with the options or selling options isn't just to earn the income, it's also to be able to buy more dividend paying companies. And that's really given me the opportunity, to not just earn really good income, but, be able to determine in the future I'm going to be able to earn even better income. So with that being said, I do want to jump in. I do want to share some specific companies that have been paying dividends really well, and I want to share with you how they've been increasing the dividends. And these are really three really good companies to invest in, and I actually sell options on them as well. So compared to some stocks that are really volatile and have lots and lots of expirations, you are a little bit more limited in the expirations that you have with these stocks. But I found that they, if they are assigned to me, it's at such a good value that, the dividends that I earn on them really, again, it's kind of a double whammy. It works out really well for me. So Um, let's jump into that next. And at the very end of the video, I'll share my trades for this week and how I'm doing this week. I'm not doing as well as last week, but again, it's like I seem to do one trade a day, and I earn around 200, a little bit over 200 each day selling. Selling an option or a contract. So I'll share that at the very end. And as always, if you want, there's details below about my memberships if you want to take a look at them. I have two primary memberships. I have a $10 a month that you get my trades, you get my planning worksheet, you get my favorites each week, as well as I'm going to add more. I'm actually going to add one of my accounts and details about it that I've done better in it. I've done more trading in it. So I'm going to share that with my membership, probably starting in March. And then my more expensive membership, which is only $25 a month, I actually provide one-on-one coaching, and I'll do a weekly call with someone for 15 minutes. Of course, it always ends up more than 15 minutes, which is fine with me. I really enjoy talking with people. So, again, take a look below. All the details will be below. And as always, please hit that like button and subscribe. I'm still a growing channel, and I really want to get the word out. I want people to understand, that they can do really well with passive income by selling options and earning income from dividends. So stay tuned. Let's jump into the next part of the video. Okay, now let's jump in and let me share with you these three stocks and why I like them so much. And, I'm actually going to let you see what the dividends look like. So the first is Fidelity National. This is a company, again, I've sold options on, as well as I own a couple hundred shares of it and pick up a nice dividend. So you can see it's got a high ranking. It's currently a fairly good value. It's $43. Its high is 48. Its low is 33. So it trades in a small range. And here you can see it's not. I don't think it's overvalued. This is going back 5 years. So they did get hit kind of hard with what's going on with the housing industry. I believe they do insurance related to home ownership and maybe even some life insurance. So it's a really good company, highly ranked, has done quite well. So let me take you down. We're in my Schwab account, so you can see all the information Schwab gives you. It makes it, for someone like me who's likes to do investments and look things over and get a feel for what's going on. Now they do have earnings coming up next week, but they've only missed earnings. I guess last quarter they missed earnings, but you can see their price to earnings is relatively low, and they bring in quite a bit of revenue. And let's see, here's their dividend. So they're paying over 4% dividend wise, which is really good. But what I really wanted to share with you guys is you can see how quickly they've been increasing it. So you can see, I believe, from 21 to 22, 13%, 18, or what is that, 10%, and so on and so on. If you go back and you look, so 2022 they paid $1.77. Now if you own them 10 years ago, the dividend was 66 cents. So literally in 10 years, a little less than 10 years, they've gone from 66 cents to $1.77, which is, unbelievable that they increase it that much. So you can just imagine you own it today and they continue with this increasing the dividend every year. It could be triple what it is today. So here you can see they've got plenty of cash to cover the dividends, which is nice. And then here you can see 3-year average 9%, 5-year 12%, 10-year 12%. So my guess is probably it's a little lower in the last couple of years just because of what we've gone through, especially last year. So that's Fidelity National Financial. It's a really good company. Another one I like is, and I actually believe I talked about this in my video last week, is Williams Sonoma, and it's also an A ranked by Schwab, and you can see here it's also not overpriced. It's definitely closer to a 52-week low versus a 52-week high. It's done really well financially. You can see here it's beat earnings almost every quarter, and they also have a very small PE ratio. Now let's come down to dividends. So here they're paying $3.12, which is only a 2.38% dividend. But if you look at how quickly they're growing it, you can see here if you had let's do what we did last time. But if you owned them in 2013 or 2013, dividend would have been $1.16, and then now they're paying over $3 in dividends. So you can just imagine in a 10-year period, again, it's almost tripled, not quite tripled, but pretty close to that. And here we can also see they've got plenty of cash to cover their dividends, so there's no risk of them cutting their dividend. And here their 3-year growth rate is over 12%. Their 5-year is 10.6, and their 10-year is 13.9. So another great company. I actually have sold a lot of options on them lately, and they do have really good premium. Again, I believe last week I actually sold some 2 vertical put credit spreads on Williams Sonoma, and that wasn't my first one. I think I've sold 3 or 4, or I've done 3 or 4 trades on Williams Sonoma. So if they're not on your watch list, you definitely should add them. And then next is GLW, which is Corning. Really, again, a really good company. One of my favorites. I own quite a bit. I think I have over 400 shares, and I've also got several vertical put credit spreads currently on Corning. And I think I also have a cash secured put on them. But, so they're nowhere near their high either. They're kind of right in the middle of their range, and they trade on a very small range between 30 and 42. So it's it doesn't move that much, which is really nice. And usually you can pick up some pretty good premium. So here, let's look at dividends again. And you can see here they're also increasing them rapidly. So if we do my 10-year situation here, so back 10 years ago, or just shy of 10 years ago, they were paying 39 cents. Now they're paying over $1.08. So again, almost triple over a 10-year period. And they also have not quite as much room for paying the dividends, but still quite a bit. And you can see their 3-year growth rate of dividends, 10%, 10.9 or 10.5, 5-year 11.7, 10-year 13.1. So again, really good dividend payers. And all of these, I sell a lot of options on them and do quite well. And I believe I had some Fidelity get assigned to me, but with this kind of dividend payment, it's something I wanted to own, and it was at a price I wanted to own it. I believe it's even profitable at this time. So those are the really fast dividend payers, and I wanted to share that just so you could see what my investment philosophy is. I'm looking typically for these kind of companies that not just pay good dividends but are increasing the dividends. You can find other companies that pay 8 to 10%, but they're really, really risky and they could go belly up. So that's this part of the video. Let's jump into my trades, and I'll do that next, so stay with me. Okay, let's jump into my planning worksheet for this week. This is what I share with my memberships each Sunday or Monday. This one I sent out on Sunday because I got it ready early so I could watch the Super Bowl. But my favorites for this week, I won't go into a whole lot of detail, were Citigroup. They are who I use as a credit card handler. I've been very happy with them, and I do feel like they're still a really good value. So they've worked out quite well. So cash secured put is what I like to look at when I'm trading on them. And here I just put the different dates, the delta, what I think the total premium that you could earn. It's kind of an estimate. IWM, this is the ETF. This is the one situation where I'm not following my own rules. I'm looking at trading on IWM to make a little bit of extra income. I'm still using the same delta and risk profile, but I don't really want to own the Russell 2000 ETF, at least at this time. I may change my mind down the road, but I did a trade on it, I believe, yesterday, and I actually went farther out. And a lot of you have added comments about why do you keep going so far out. It's mainly I want to earn a certain premium. I typically do two contracts. I try to earn as close to $100 on each contract. So that's like $200 for two contracts, and I try to do one of those a day. I get on and off. I spend maybe 15, 20 minutes and make about $200. Like I said, I did one every day this week, and I think last week I did it a trade. I did one day, I did two trades, and every other day I did one. I believe I didn't do any trades on Friday. Next is Zoom. I'm on Zoom this every day because of my memberships and the master classes that I'm involved with. And I really like Zoom. I do like the fact that they have no debt. So I'm constantly looking at doing more vertical put credit spreads with Zoom. So with them, again, I provide a strike, I provide the delta, 15 delta. You can see all these are pretty close to a 15 delta. The average is a 16 delta. And actually, Zoom pays really good premiums. So it's, I haven't made any trades on it today, but I may make a trade on it tomorrow, depending on what happens with the market. And last but not least is BKE, another debt-free company. Almost, well, two of the three or two of the four this week were debt-free companies, Zoom and BKE. And I had mentioned earlier in the video, um, you know, when Williams Sonoma is also debt free, and to me, if someone can run a business and be debt free, it's just amazing to me. So I really like to invest in debt free companies. So BKE is Buckle. They're the ones I've talked about in other videos that pay a really good special dividend once a year. I believe they paid it back in January, and it massively increases the amount of dividends they pay. So I don't know when they're going to pay the next one. It's something I need to look at because I do want to own them. I may take more risk and sell a cash secured put with a bit more risk because, again, I really want to own them, and I didn't get that chance last year, and especially didn't get that chance to pick up that dividend. So those are some of my favorites. Some of the others have been on my list for a while. LEG, it really doesn't expire till March, but I'm trying to manage it. It's still fairly deep in the money. But I like LEG. It's another one of those situations. I think they've been oversold, and they're still paying a good dividend, and they're making pretty good earnings, all things considered. So I guess they've just not the favorite of a lot of people out there, but I still like them. HEDG is an ETF. It's a wisdom tree European ETF, and it's something I invested in a while back, and it's currently in the money, not too deep. I think it's currently 77, and my cover call is 75. So I'm okay if that gets called away because I really want to put my money towards something else. It's not one of my favorite ETFs. So if it doesn't move between today and tomorrow and I can't roll it and make some money, I'm just going to let it get assigned. I'm perfectly fine with picking up that cash so I can sell more options. GLW, I talked about this in the prior part of the video, and I sold two of those covered calls. I did it with a short strike of 40. I did take a little bit more risk, 28 delta, but it's been trading around 35 for a long time, and it's not, I think 40 is right near its all-time high. So yeah, right now it's trading at 35.61. I went a little farther out to pick up more premium, but I did pick up $194 in premium, and that's like a 5.49 yearly return, which again is higher than the dividend. So for cover calls, my goal is typically to double my dividends. So if I'm earning 3 to 4% dividends, I want to earn between 6 and 8% when you combine the covered calls with the dividends. So, and then here's Williams Sonoma. So I did it on the 14th. I did a 170, 160. This is a 16 delta, almost 16 and a half delta. Its current price is 191. So you can see it's still very far out of the money. almost $21 out of the money, and I picked up $197. Since this was a vertical put credit spread, the needed cash was 1,800, and I had a 42% return, yearly return on it. So one of my better trades this week. Next, I did IBM. I did this yesterday, and I did a vertical put credit spread of 120 and 110, a 16.43 delta, so pretty close to that 15 delta. And it too is also very far out of the money. So currently, IBM is 135. I don't think it's going to get down to 120, but if it does, I'd again be really happy to own it. And IBM's another one that pays a good dividend. It doesn't increase the dividends like some of the ones I showed you in the earlier part of the video, like Williams Sonoma or Corning. But I think it's usually 2 to 3, maybe 4% on a yearly basis. So, and I believe they pay almost a 4.5% dividend. For it, I picked up another $191. Again, I'm trying to get pretty close to the $100 per contract since these are two contracts. It's fairly close to the $200. This, since it's a vertical put credit spread, is the required cash that's needed or margin. And this is a 31% yearly return, mainly because I'm going a little farther out. I went out to 616, and the previous Williams Sonoma I went out to 519. And part of the reason for that, you guys, I know a lot of people will want to do weekly, but some of these don't have as many expirations. So in a lot of cases, I had maybe something in April and then had to go out to May or June. So some of these companies don't have as many expirations as say as a Google or Amazon or Microsoft or some of the or Apple or some of those other companies. And then last but not least, I actually did this today, was Qualcomm, and I did a new vertical put credit spread, 110 and 100, went out to May 19th. It's a 15.24 delta, so again, right at my 15 delta that I like. This one I went out, I think this is 92, 93 days, so I didn't go as far out for this one, and I picked up $229. So this was one of my better trades for the week, and I did this literally a couple of hours ago. And it represents a 51% yearly return. So again, it's 4 days. Each day I've done one trade and brought in, these average out to right at probably 200. We could actually, well, I won't do it right now, but it's really close to 200, I think. Down here, 812, yeah, so it's what, 803 on average per trade, or 203 on average per trade. So and that's what my goal is. It's kind of like if I can spend 30 minutes and make $200, then I'm doing really well, and I don't need to push it too much. And I've been able to pretty much find a trade almost every day. So, and my guess is I'll do another trade tomorrow. And again, if you're a member, I post my trade literally right after I make it. So I get done with it, and then I actually post it to my membership, so they can see what I'm doing. And I also add commentary and extra comments related to why I made that trade. And I have a fair number of people that will ask questions. Actually, I have one primary person that'll ask questions, but I really like answering questions. I wish more people would ask more questions. And that gets me to my other point. I typically like to answer all my comments, so leave me a comment if you don't agree with what I'm doing, or you like what I'm doing, or you have suggestions you do it different. Please share. I like people to also use those comments as a way to learn how to do this. So I hope you enjoyed this. I hope you're having a great week, and thanks for joining me. I look forward to bringing another video next week. Thanks.